What if I told you that one country may have quietly cornered the world's silver supply? And most people haven't noticed yet. It's not through a dramatic announcement, not through war, but through a slow, calculated strategy that could reshape global wealth for decades. Because if silver really becomes scarce, the price shock won't just hit investors, it could ripple through technology, energy, and everyday life. The country at the center of this story is China, a nation that has spent years securing critical resources while the rest of the world was distracted. Some analysts now believe China controls or influences a massive share of the world's available silver, directly and indirectly. If that's true, it raises a chilling question about what happens to your savings, your investments, and even the value of your currency. Before we go deeper, if you care about protecting your wealth in an uncertain world, tap like, subscribe, and join us here at The Gray Ledger, where we connect the dots others ignore. Because this story isn't really about metal, it's about power. Silver may look like a simple commodity, but it sits at the heart of modern civilization. It's inside solar panels, electric vehicles, medical equipment, smartphones, and military technology. In fact, silver is the most electrically conductive metal on Earth, which makes it nearly impossible to replace in high-performance systems. That means demand isn't just steady, it's exploding. Every new solar farm, every EV battery system, every advanced circuit quietly consumes more silver. Now imagine demand surging at the exact same time supply starts tightening. Global mine production has struggled to keep pace for years, with many major deposits aging or declining in output. Unlike gold, most silver isn't mined from primary silver mines at all. It's produced as a byproduct of mining for copper, zinc, or lead, which means production depends on entirely different markets. If base metal mining slows down, silver supply can drop even if silver demand is rising. This creates a fragile system where shortages can appear suddenly and spread quickly. Meanwhile, industrial consumption already eats up the majority of newly mined silver each year. What's left for investors, governments, and reserves is far smaller than most people assume. And that shrinking leftover supply is exactly where China has been quietly positioning itself for years. Long-term supply contracts and strategic stakes in resource projects across the globe. From Latin America to Africa to Central Asia, Chinese state-linked companies have invested billions into metals that power the modern world. Silver often comes bundled with those investments, quietly flowing into China's industrial ecosystem. But direct mining control is only one piece of the puzzle. China is also the world's largest manufacturer of solar panels, electronics, and electric vehicles, all of which consume enormous amounts of silver. So even silver mined outside China frequently ends up inside Chinese factories, never returning to the global market. Once used in industrial products, much of that silver becomes extremely difficult or expensive to recycle. In effect, it disappears from available supply for years, sometimes forever. This creates what analysts call demand absorption, where one economy quietly locks away material through manufacturing. And China's domestic stockpiling policies amplify that effect even further. The government has a long history of building strategic reserves of critical commodities, especially those tied to national security and energy independence. While official numbers are rarely disclosed, import data suggests massive inflows of precious and industrial metals over time. Some shipments go to state reserves, some to private industry, and some to investment demand from Chinese citizens. Unlike Western investors, who often hold silver through paper assets, many Chinese buyers prefer physical metal. That means real bars, real coins, real material taken off the market. Meanwhile, global inventories on major exchanges have been trending downward, not upward. Available above-ground stockpiles that can be delivered quickly are far smaller than headline numbers suggest. If industrial users suddenly scramble for supply, those inventories could vanish shockingly fast. And this is where geopolitics enters the story. Tensions between major powers have been rising, from trade disputes to technology restrictions to military competition. In a fractured world, countries increasingly want secure access to critical materials within their own sphere of influence. Silver, because of its role in energy systems and defense technology, sits squarely on that strategic list. Consider what happens if global trade routes become unstable or political tensions escalate further between China and the United States. Access to key materials could suddenly be restricted, prioritized, or redirected toward domestic needs. We've already seen similar dynamics with semiconductors, rare earth elements, and energy supplies. Silver could easily follow the same path if governments decide it's too critical to leave to open markets. For investors, this creates a strange paradox. Silver is both a precious metal, traditionally used as a hedge against inflation, and an industrial metal tied to economic growth. When the economy weakens, industrial demand can fall, but during technological expansion, demand can skyrocket. Today, we're entering an era where energy transition policies are pushing massive infrastructure build-outs regardless of short-term economic cycles. Solar installations alone are projected to consume staggering quantities of silver in the coming years. Electric vehicles, charging networks, and smart grids add even more pressure on supply. Yet new, large-scale silver discoveries are rare, and permitting new mines can take a decade or more. Environmental regulations, community opposition, and financing challenges slow projects even further. In other words, supply cannot respond quickly, even if prices surge. That imbalance between slow supply and fast demand is what creates explosive price moves in commodity markets. Some analysts believe we could see a structural deficit, where global consumption permanently exceeds new production. If that happens, above-ground inventories become the buffer, and once those are drawn down, panic buying can begin. Industrial users cannot simply stop production because silver is expensive. A solar panel manufacturer or electronics producer must secure supply at almost any price. That urgency can drive bidding wars that push prices far beyond what traditional models predict. Meanwhile, retail investors often arrive late, chasing headlines after the biggest gains have already occurred. By the time mainstream media declares a silver shortage, the easiest profits may already be gone. The real advantage belongs to those who understand the structural shift before it becomes obvious. But here's the part most people don't consider. A silver shortage wouldn't just be an investment story. It would be a signal that the global system itself is under strain. When essential materials become scarce, governments intervene, markets distort, and prices stop behaving normally. We saw hints of this during energy crises, supply chain disruptions, and sudden commodity spikes over the past few years. If silver enters that category, it could expose vulnerabilities in everything from clean energy goals to defense readiness. For individual savers, the question becomes deeply personal. Do you trust financial assets alone, or do you diversify into tangible stores of value that exist outside digital systems? Historically, precious metals have served as insurance during periods of currency, instability, or geopolitical tension. It's not because they produce income, but because they cannot be printed or created at will. Unlike fiat currencies issued by central banks such as the Federal Reserve, physical silver has to be mined, refined, and delivered. That physical constraint is exactly what gives it long-term credibility during uncertain times. However, silver is also volatile, capable of sharp rallies followed by painful pullbacks. It rewards patience, not panic, and punishes those who chase trends blindly. Smart investors typically view it as one component of a broader strategy, not a get-rich-quick trade. The bigger lesson may be less about silver itself and more about how quietly the balance of global power is shifting. Resource security is becoming just as important as military strength or economic size. Countries that control materials control production, technology, and ultimately influence. And when control becomes concentrated, the rest of the world must adapt, often at a cost. Whether China truly holds 70% of accessible silver or not, the direction of travel is clear. Competition for real assets is intensifying. For viewers of the Gray Ledger, the goal isn't fear, it's awareness. Because awareness gives you time, and time is the most valuable asset of all in uncertain transitions. If this perspective made you think differently, share your view in the comments. Let us know whether you believe silver will become the next major battleground for wealth. And if you found this deep dive valuable, share it with someone who still believes resources will always be abundant. Because the future may belong to those who prepare before the crowd.